Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. Markets have been roaring higher and higher. And if you remember, I have done a PSU bank index, the sectorial view, saying that this decade belongs to the PSU bank. I've done a video in July, and since then, index is up over 70%, and this has been one of the best quarter, I would say, for PSU banks, where the stocks have been rallying higher, index has been rallying higher and higher, and it's been on the talk of the town. Most of the investors who have been holding PSU bank may be feeling that yes, at least the prices are there when the trending is there. Those investors who have watched our video and bought maybe minting the huge profits over here. Now, one index where I believe the PSU bank momentum can be expected, or PSU the momentum like the PSU stocks, is the CPSE index. Now, CPSE is basically the central public sector enterprise. And if I just look at the stocks which are into the CPSE, they are ONGC, and we look at the constituents and weights of each and every stocks, how the index has been formed. But if I just again talk of the PSU bank, I believe still there is a huge room for the sector to head higher. This is just a beginning of a new era starting for the PSU banks. Probably I think even if you just look at the last 1.5 years, how these the public companies have been coming back. We started with the sector like the railways, where we saw IRCTC coming back very strongly. We saw some of the companies into the capital engineering like BEL, which have seen a huge momentum. We have seen PSUs coming back very strong. And the next leg, I believe, probably it could be the CPSE, which could lead higher. Though coming on to the weightages with the in line with the markets, they may have the lower weightage. The stock constituents may have the lower weightage in line with the index. The same is the case with PSU banks, apart from probably SBI or Bob, or the Bank of Baroda. None of the stocks have the huge weightage onto the market's momentum. But looking at the structure or looking at the rally into the PSU banks, I believe yes, still it is a start. And CPSE index, I believe, is starting with the new era. So first, let's look at the constituents of CPSE over here. So it starts with the ONGC, which holds weights of around 22% into the CPSE index, followed by NTPC, which holds around 20%. Power Grid Corporation holds around 18%. Coal India around 17%, BEL around 9%, NHPC around 5%, and the Oil and India, SGVN, NLC India, Cochin, and NBCC hold between 1 to 2% over here. So now, if I just look at the constituents and weights, what could lead the index higher? If I just have to look at the top 4 or top 5, probably they hold around 90 to 93% of weights. And if I just look at ONGC, NTPC, which holds around 43-44%, followed by Power Grid, which holds around another 18%. So if I just look at the top 3 or probably top 4, they hold around 80% of weights. So yes, if index has to go higher, or the CPSE stocks has to go higher, these are the 4 stocks which can lead the index higher. So let's start with the first chart onto the CPSE weekly chart over here. So if I just look at this weekly, right from 2008, if you look at the bottom, the rally was there. Since then, it went into the consolidation. Right from 2011, we saw higher levels. We saw again a fall. 2020, there was a fall. Again, the V-shaped recovery in line with markets was witnessed in CPSE as well. But now back in 2022, this high have been taken out. And if you look at these 2 horizontal line on your screen, the high has been taken out onto the index over here. The momentum has been onto the bullish side, in sync with the markets here. Now, if you look at importantly, if I just look at the right, extreme right, we have seen a U-shape and probably the cup and handle pattern after a certain rally, right from 2020 rally to 2021. It rallied and it went into the consolidation. We have seen a cup and handle in most of the sectors where the momentum has been very aggressive. Similarly, Into the CPSE, this cup and handle pattern is still visible on the charts after a breakout. So post this long-term breakout, if you look at these two black horizontal line again, right from 2014-15 highs back in 2018-19 highs has been taken out convincingly. Prices are sustaining, and this is not looking at the 1 or 2 weeks. For last couple of months, prices are trending above these resistance zone, and for 6, 7, 8 weeks, when the prices are trending above the breakout levels, it gives a confirmation that yes, the momentum is very, very stronger. The breakouts are not the failure one, though being an index, the momentum may be a slower on the positive side, but yes, it seems that the structure is very, very positive. I have seen this in mid of November when this breakout has happened, but I was slightly waiting for a confirmation to look into the index. But now when the stock index is trending above this breakout level for 6, 7 weeks, it seems that the confirmation is stronger over here, and we may see a momentum heading higher. Second chart, if I just look at the daily over here, if you look at, as I said, the triangle structure breakout is also visible onto the charts. And if I just look at, as I said, if it's trending around the breakout level, trending over the breakout level for quite long. The breakout was retested, if I just look at the right hand side, and again the momentum is shifting onto the positive side. It seems that weekly, again the long term chart is indicating positive, and daily the entry level charts are indicating the breakout is stronger. Prices are trading above the breakout level. So with the long term, with the short term, both are indicating a positive bias, and I believe yes, it can be a good time to invest into the CPSE stocks or CPSE index. And even if as an investor, are not looking for a stock specific action or stock momentum, you can also look at and explore probably the CPSE ETF which we have. We have Nippon and ICICI HDFC mutual funds are available. So you can just explore these ETFs and these mutual funds where the funds are into the CPSC. So as I say, what can lead the stocks higher? Again, coming on to the constituents slightly here again, as I say, ONGC leads by 22%, NTPC around 20%, Power Grid, Coal India around 17-18%, and this four probably holds around 80% of weight. So let's look at the ratio chart, which I generally prefer in most of the videos if you have been following me, just to gauge the trend, just to gauge what can lead the index higher. Let's look at first chart, which is the ONGC by CPSE. Again, this is a daily chart and ratio chart. So what I've done is I have divided ONGC stock price with the CPSE index. Just a small understanding, when this ratio chart goes higher, the numerator outperform. In this case, ONGC is our numerator. When the ratio will go higher, ONGC will be outperforming against the denominator, which is CPSE in this case. So if in case ONGC continue to outperform against the index, being a 22% weightage is slow and steady, will take index higher as well. Though just to understand, if in case ONGC leads by 10% and other stocks are leading index by 2%, then there is an 8% 10 minus 2, which is 8% outperformance of ONGC over the CPSC. So just these gives an important as an investor, what could be the outperformer or what could be underperformer. So ONGC, looking at the charts over here, we are witnessing double bottom breakout onto the daily chart. So if I just look at right from the base of 2018, now 2018, probably we may have seen a higher rally coming onto the CPS index. But if I just look at right from the ONGC, look at the structure over here. August 2021 till December 2022, probably we have seen a range bound coming into the markets. Now the ONGC being trending higher and outperforming in the recent scenario for the past few weeks. The structure seems very, very interesting. Now the double bottom breakout above the green line, if you look at the neckline, indicates that yes, the ratio has been bottoming out. ONGC is a candidate which could lead into the outperformance into the CPSE index, and the momentum can be fast and furious. Second, if I just look at this orange line, when the previous high was there, it is also been taken out. So with the breakouts, with the previous high been taken out, the stock index, the ratio chart forming a higher low structure as per the Dow theory, it is a bullish structure. So ONGC is the one candidate. Yes, seems very, very interesting onto the positive side, and that could lead with around 22% weightage. Power Grid, 17-18% weights. Look at right from 2014, this index, this ratio chart is very trending, very, very bullish with the higher low structure. Again, this is a weekly chart. Now look at, again, the retest has been happening, and every retest Power Grid has been an excellent opportunity to look into the CPSE index. So yes, with 17% weightage, we have seen a bullish scenario over here. Third, BEL, again around 10% weights. Now if you look at right from 2009 2010, if I just look at the upper rising trend line, we have been breakout. The retest has happened, and if you look at the lower, the structure has been very, very bullish. Now if you look at the arrow over here on the extreme right, this has been retesting, and it indicates that yes, BL is again an outperformer, can be an outperformer into the CPSE henceforth as well, and this has been amazing for BL, and one of the outperforming into the CPSE index. Coal India 18% weights. Look at the trend line breakout right from 2016. There was a trend line breakdown on the positive side in 2020 to start, probably mid of 22, and we are witnessing the positive momentum coming into the Coal India as well. If I just look at the weights again, ONGC 22%, Power Grid around 17-18%, Coal India around 18%, BL around 10%. So on an average, if I just look at 60-65% of the stocks are indicating yes, they are leading into the CPSE as well. So probably if they continue to lead higher, we may see CPSE index outperform. One stock with weights around 20%, which is NTPC, is the one which is slightly hurting me as a risk part. Again, I'm not looking at the stock will fall. I'm just looking at the stock may consolidate and the other stocks may lead into the CPSE. So if I just look at this chart over here, look at the red rectangle structure onto the right side. The ratio chart has been trending in the narrow range over here for quite some time. NTPC is outperforming, and for quite some time NTPC is underperforming. But importantly, if I just look at the green line right from 11-12 highs, the ratio chart is trending above the green line, which is again a slightly positive side. In case we see this ratio chart breaking above the red rectangle structure, that could be the one where NTPC can outperform by a huge margin against the CPSE index price. And being a 20% weights, being a 20% weights, that could lead the rally by a big margin into the CPSE space. So keep a watch on this. Though NTPC, I would not say that it's been on a negative side, but yes, it indicates that there is a ping pong between outperformance and underperformance of NTPC and against the CPSE. So at current point in time, I'll wait for this breakout. And if you remember, if you have followed my energy index video, the same structure was there when energy index was trending ping pong against the Nifty, and when it broke out, we have seen Reliance coming back very, very strongly from 2,200 levels to 2,600 levels, and it had led the market. So keep a watch on this NTPC. Yes, I don't think that there is a bearish structure over here, but yes, it may, being a 20% weightage is slightly keeping me on another foot where the risk is being calculated. So keep a watch on NTPC. Once this breakout happens, yes, there could be a rally into the NTPC. So just to look at or just to sum up the momentum, CPSE, I believe, yes, there could be another leg like the PSU banks index have been there, and probably we may see next 1 year CPSE index could outperform. As an investor, if you are not looking for a stock specific action, you can explore ETFs. You can explore mutual funds, where there are a number of options available for investors to choose the best fund into their CPSE space. And as I said, looking at the structure, apart from ONGC, apart from NTPC, 60-65% weights of the stocks indicate that they may outperform into the CPSE index, and probably take CPSE index much higher into the positive side. So coming on to the markets, yes, we are looking at the bullish momentum into the markets. The markets are trending near the all-time high. Banks have been outperforming. PSU has been outperforming. Financials are coming back very slowly onto the positive side. IT, which has been a slightly laggard this year, probably, I think, if you remember, I have done a video onto the two sectors. Probably we should look at Diwali. One was the IT and one was the PSU bank. And IT, yes, slow and steady coming back very with the short covering rally into the Nasdaq, with the short covering into the Infosys TCS, and I believe yes, there is a good space for accumulation into the IT space, and probably we may see IT coming back very strongly next year. So keep a watch on, and CPS is the one addition for 2023 where you as an investor you can look out. Probably if you are not looking for a stock specific, as I said, you can explore ETFs and mutual funds. Signing off, Brijesh Bhatia.